Good morning, everybody. Welcome to another daily market report brought to you by Mike Bjork. Today is Hump Day. It's March 18th. Hope you guys had a great St. Patrick's Day yesterday. And for Persians, Charshamba Chambasari. Sorry, I'm not very good at pronouncing it, but for those who aren't aware, Persian New Year is coming up on Friday, first day of spring also, and it's just kind of like a little celebration they do with fire jumping and stuff prior for. So we had a little fun last night with my son. Anyways, jump right into it. We got only one item today. It's all about the Fed statement today. It's going to be later this morning, about 11 o'clock Pacific Standard Time, when this will be announced. So right now the stock market's down in anticipation of new wording to be implemented in there, and of course the concern with the wording is that Janet Yellen kind of forewarned that she's going to probably be taking the patients out of the equation. So there's still a little doubt as to what's going to happen in the near future as to if they're going to raise rates during the summertime, and that's where they're a little jittery about. They want to see if they're going to put any new tables as to indications as to what will trigger a rate increase and stuff. So it's a little jittery this morning as the market's kind of pulled back in anticipation of what that statement will be. So expect a lot more volatility later in the day today, and then of course tomorrow we'll probably have whatever correction that they may have overreacted to today. Expect. Today also look at the oil prices. Wow, we're a lot lower than we have been for a while. The last lower number I saw was around $45. Now we're down to about 42, I think 66 so far I saw this morning. So I look forward to seeing a little bit lower prices at the gas pumps since they seem to have jumped up a little bit over the past few weeks. So it'll be nice to see a little bit more of a reprieve in that area again. Hey, the bond market here is a little bit better than where we were yesterday. So slightly better in pricing from where we are, and that could improve depending on what the wording is in the Fed. So it could go different directions depending on again what Janet Yellen's what her announcement will state in there, and how the investors will react to it. Hey folks, also don't know if you guys caught yesterday's recording, but important note that the CFPB is relaxing regulations on pre-approvals. Basically, they're allowing loan officers not to even have to document, to look at the documentation to determine a pre-approval. So basically, it will be more or less a pre-qual. So I highly recommend talking to your loan officer and making sure that you get a full credit approval before you accept any offers as a listing agent, or even as a buyer, to make sure that that client is fully qualified. As before, some people had issues in escrows where the loan officer didn't do their job due diligently, or perhaps there might have been some other issues, underlying issues that may not have been known, and may not even been the loan officer's fault. But in any case, getting a full approval from underwriting at least will help strengthen your offers and strengthen your situation, because with the new scenario, you may have a few loan officers taking advantage of that, and may have could create a lot more future problems in escrows, as we have here in California, escrow periods, or in the middle of a transaction trying to obtain the financing. So my recommendation is get a full credit approval. We've been doing this for a while. We've worked with the clients, so especially in this market, we'd like to make sure when we submit offers that we have a full credit approval, so that way it strengthens our offer in the seller's eyes. All right, have a wonderful day. Thanks so much for watching. We'll look forward to see you guys tomorrow. Take care.